Founder of Yellow Tunnel, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions and answer any questions you might have. For those of you who are new, welcome. If this is your first live event, type in first. Always want to welcome new subscribers. My background is general recordings. So my background is in technology. I've been have a master's degree in computer science, specializing in statistics and artificial intelligence. And I worked as a CTO and an executive in several fintech startups here in Chicago. Started TradeSpoon and Yellow Tunnel back in 2012. And in the past 2 years, we have Keith Harwood, who joined from Options Hotline to help with the models, backtesting models, making sure they're accurate, and also live trading room. So I encourage you to also participate in our live trading room discussions. So that's my background and Keith's background. I'm going to go to specific trade ideas and trade setups. So it's very important to understand the risk associated with trading stock and options. You can always visit optionsclearing.com to understand the risk associated and suitability associated with trading stock and options. You can always pause the screen if you need more time to read the disclosures. All right, before we jump into trading psychology, let's look at the current market conditions. They have changed actually in the past few hours. You can see spiders. Let's look at the weekly chart. So, well, firstly, let's look at aggressive power trade. This was before this morning. So before this morning, model basically says that the stock market is overbought and potentially can reach 646 level. This is the data that's posted every day, 8 p.m. to 8:30 a.m. And you can see market trading exactly at the current 646 level where the model predicted, even before the announcement that Iran is willing to talk and potentially end the war, right? Market has been overbought and now oversold, and now it's getting to the overbought level. So giving you 646, 631. If you look in the next 10 days, it sees potentially reaching 600 level on spiders. Again, the momentum behind the bears is accelerating and pushing the market down. We did break to the important level of 650. Next 1 and 2 months, it still sees potentially getting to the 700 level. Again, a lot of it is contingent upon the war in Iran and whether there is an amicable solution or not. So we're trading right at this important support level, right? If you draw this line here, right? If I push this line here, this was the, let me zoom in so you guys can see it better. Yeah, so we broke through the important support level at 650, 6,500, 6,550 on S&P, and we're trading right at that level. 6,517 was the reaction when the headline news crossed that they potentially end in the war in Iran. You can see crude oil for now is actually not moving. Right? Crude oil is flat for the day. And the more important, or just as important, is 10-year yield. The 10-year yield is still sitting at 430. It was as low as 428. Powell made an announcement, I think, yesterday, basically saying that oil shocks are usually temporary and do not impact interest rate decision. And that is the concern that that Fed will increase the rates, will have rate hikes because of the elevated oil prices. So that was the original reaction. And now you have a follow through with the potential end of the war. Still staying above 430 level. Dollar is still staying at the 100 level, right? And crude oil is actually flat, right? It's not moving, it's not, it's slightly lower, 1% lower, fluctuating between gains and losses. So SPX is an important 6,500 level that what used to be a support is now becoming overhead resistance. For the market to gain momentum, I think few things have to happen. First, we need to trade above 6550 level, right? The 6550 level, at least for a few days. Ideally, crude oil, you want it to drop at least below the, I was looking at the crude oil. So previous cycle high, right? The 2022 high, 92. So you want to see crude oil drop below 92, ideally below 85 level, right? So the crude oil, first thing first, has to drop below 92 level. That's the 2022 or 2023 highs. And the 10-year yield should trade at least a couple of days below 430. And the dollar would have to stay below 100, at least for 1 or 2 days, to basically say, you know what, whether we reach agreement now or maybe in a few days or a few weeks, but we're getting closer to resolving the conflict in Iran, right? One headline news basically created overbought conditions and bounce from the oversold, right, from the oversold levels. So that's where we are in SPX level. Again, as of today, model still sees potential reaching 600 level. There is a lot of positioning at the 600 level. Keep in mind today is end of the quarter, and usually end of the quarter, rebalancing large institutions, rebalancing their portfolio, and that creates another level of volatility, right? So we had equity expiration last week. Now we have end of the quarter rebalancing. We have a headline news, but the main levels have not been broken, and this is still. So let's look at the bar chart data. In terms of gamma exposure, any questions so far? Do me a favor, type in questions. I want to make sure that you guys can actually hear me. Instead of questions or instead of chat, if you can type in questions, that would be great. So in terms of position, you can see we have a lot of position at the 6,000 level, right, and 7,000 level, those round nice numbers. And now market trading right at the 6,500 level, right, 6,500 level. That's where used to be a support and now becomes an overhead resistance. So the question is, let's look at, April is already, let's look April. Let's look at April monthly expiration, and let's look at the May monthly expiration. Can you guys hear me? Anoop, Chuck, Gordon, Harry, Larry, Martin, Tim. Let me know if you guys can hear me. Martin, yes, perfect. Thank you. So you have 3 different scenarios for April and May, right? On one hand, this unconfirmed headline news that actually becomes confirmed, and we reach an agreement, in the next few weeks, right? Then you have then we have scenario number 1, right? We're going to all-time highs, right? We have unemployment data on Friday, maybe unemployment ticks down, and we have a new FOMC, Fed committee chairman, right? Powell is gonna, his term ends end of April, right? There's a new Fed chair that starts, that's more dovish, interest rate's gonna go down, and we're going to the 7,000 level, right, on SPX. Right, so that's scenario number 1. Scenario number 2, we're trading in this range, right? We have a positive headline news, we're at 6,500, maybe we get as high as 6,700, right? But we're trading at this somewhere between 6,700 and 6,100, right? So that's scenario number 2, right? Based on the supply and demand for the options. VIX is still elevated, 27, 30 print. And then the third scenario, right? We don't reach an agreement with Iran, right? There's still no traffic in the Strait of Hormuz, and we have scenario number 3. Scenario number 3, we're reaching 6,000 and potentially breaking 6,000 level, right? Because the oil prices are still elevated, and that creates inflationary pressure. And this is not a short-term shock, but this is more of a prolonged inflationary pressures. And you have scenario number 3, or unemployment rate ticks up. So those are the 3 scenarios between now and 3rd week of May, right? What can happen in the next few weeks or in the next months and a half. Why is this exercise is important? Because you do want to look at you want to think about trading as a probability of certain events happening, right? Just because there is one headline news doesn't mean you have 100% certainty that the market is going to go back to all-time highs, right? It takes at least few data points and few days to resolve this. So you have those scenarios, right? On one hand, it could be 1, 3, and 2. Why this is important? Because you want to determine how much exposure you want to have to the equity markets, how much risk you're willing to take, right? We all have different relationships with our money. For some people, it's part-time income. For some, it's full-time income. For some, it's just kind of money that they don't really need. For somebody, it's money that very important for their livelihood. So it's very important to kind of decide how much money you're willing to risk. And the only way to do it, to go through these 3 scenarios, right? You have a fear of missing out, right? That the market is going to be, at all-time high, right? So right now we're all experiencing fear of missing out, right? And on the other side, you could have a fear of future regret. Right, that the market is actually going to sell off, right? And you get on the margin call and you don't have any cash, right? So you want to avoid both situations and be prepared for both outcomes, right? To determine how much risk you're willing to take. So, obviously, if you're doing short-term trading, you're looking at the end of April, or swing trading, momentum trading, this is very important. And even if you're doing day trading, right, recognizing that 6,500 is a very important level to break through, right, 65, 65.50, you might think about that the market is overbought and you want to hedge your portfolio. So how many of you say that we're going to have scenario number 1? How many of you say scenario number 2 and scenario number 3? Martin, scenario number 3. Okay, Alex, I vote for 1. Earnings are coming, valuations have come down. All right, I like that. 2.5. Probably number 2. Okay, so we have range of, some people say 3, some people said 1, some people say 2. I mean, obviously, very hard to predict because a lot of it depends on oil prices. I think I'm going to go with 2. I still think for the next couple of weeks, you have uncertainty about employment, on the energy prices, right? The economy is cooling. So, and especially with this oil, even if there is some kind of a ceasefire agreement, to resolve, paying reparations to Iran, resolving the Strait of Hormuz issue is probably going to take some time, right? It's not going to happen tomorrow. It's not going to happen in the next 2 weeks. Market doesn't like uncertainty, so I think we're stuck in this range somewhere between 6,100 and 6,700, right? Depending on what the next set of news are. Any questions? All right, how do we help on yellow tunnel? So we have different services. One is aggressive power trader that I already showed you here. Basically Armando runs every day and gives you predictions, right? Where the main support and resistance level. So today model predicted support is at 630 and overhead resistance at 647. And we are trading exactly at the 647 level, right? So it gives you levels at which market considered to be overbought and at which levels market considered to be oversold, right? It gives you 10-day prediction and then beyond 10-day prediction. So you can see for the next months, you could get to the 670 level, right? Or even 700 level, right? But in the next 10 days, if market is overbought, and especially if the headline news turn out to be not what market anticipates, then potentially can reach 600 level. In terms of stocks that are in uptrend, you have Murphy Oil and CSX, right? So energy names continue to grind higher in strong uptrend. Everything else up until this morning, we're trading in a strong downtrend. Any questions? All right, and then we have weekly power trader. So aggressive power trader model runs every day and posts signals at the end of the day, and it's geared toward active trader. The idea is to hold the positions for a day or two, right? Sometimes I hold it for a week, and model proposed to have 4 active positions and not, limit your losses to 2.5% per position. If you zoom out to weekly power trader, the model runs every Sunday. So model runs on the weekend, looks at the more of a longer term trends, analyzes longer term data, and provides a list of stocks that are in uptrend. And you can see energy names, again, COP, anything that's related to oil, fertilizers, chemicals. You can see them in a strong uptrend, but it also sees some of the stocks like Dell, Cisco, even as of Sunday, shows a strong uptrend, right? So strong uptrend. You can see Cisco is still in the uptrend. Dell is still in the uptrend, despite geopolitical risks. So this is the list of stocks that gets posted every weekend, and the idea is to hold these positions for a couple of weeks, some of them for a couple of months. Then we have dynamic power trader. The dynamic power trader is where you actually see my orders and positions, right? So you can click on orders and see that, I closed NOC trade and I closed QQQ trade, the QQQ hedge yesterday. I open up a calendar spread on QQQ. So you can see different types of trades, both stock and options. And you can get SMS message. You can look at the history of the portfolio every week. You can look at the recordings, live trading room recordings, or our different workshops, different topics if you want to research. You can type in AI analysis and look at Apple or NVIDIA and see what the model predicts for Apple or NVIDIA. You can still see that NVIDIA shows strong uptrend, potentially get in the next couple of months to 174, maybe even 195 level. Next 10 days does see potential more momentum to the downside, 156. Any questions? So that's dynamic power trader. Again, if you prefer to trade options, you have options. If they're weekly expiration or monthly expiration, you can trade using stocks. It gives you buy and sell signal and long-term analysis. You can type in your phone and get SMS message every time I trade. These are real-time orders and real-time positions that you can enter. I'm trying to potentially, wait and see if there's a follow-through tomorrow. If there is no follow-through, maybe put that QQQ put spread back on. But now I'm going into the May, right? Going into May 565, 545 put spread. What else? Then earnings power trader. So we still have earnings. Nike announcing earnings during live trading room. I saw Nike call spread, right? So taking advantage of market volatility and selling out of money premium. Didn't want to, especially market is overbought, did not want to sell a put spread, but decided just to sell a call spread on Nike. And that will be the earnings power trader. And finally, we do have a profit accelerator. This is where I trade stock or options. Any questions? Can you zoom out? All right. What about now, Martin? Is the screen better? I can try to make it even more big. No, that's too much. 150. Is this better? Yes. Okay. Perfect. But put spread or debit spread, right? So I'm still, I think you need at least a day or two to decide whether this is a change, whether we reach the bottom or not. One day usually doesn't set the trend. VIX is still elevated at 26, and 10-year yield is still at 430. So if for the next couple of days we're still 10-year yield is above 430 and dollar is above 100, right, and crude oil is above 92 or 90, right, then probably there's still a lot of uncertainty in the market, and then I would go in and consider buying hedge again. So this time I'm going into May. So I have an open order to buy QQQ May put spread, 565 put and 545, right? I'm buying to open 565, selling to open 545. And right now I put an order at $4.50. I mean, it's getting close. It's at $5.15. But I want to see what's going to happen in the next couple of days, right? Especially we have unemployment data on Friday, and what are the next headline news, right? Chuck, let me know if that makes sense. Martin, all right, perfect. So I still, there's still a lot of uncertainty in the market where it makes sense to hedge. Maybe at this point I would be more market neutral. If I was bearish yesterday, my portfolio was bearish yesterday, I closed half of my QQQ hedge, so now I'm market neutral, right? I have the long positions like JEPQ that will benefit from the market going higher, right? And then I have QQQ put spread or put spread on some of the stock positions that I have that gives me a hedge from the current market volatility. All right, thank you. So that's our paid services, right? We also have free content. We have a blog that gets published every Sunday. I encourage you to open up account on Yellow Tunnel. You can always click on forgot password if you never set up your password. And every week on Sunday, we send you some of the content from trading psychology, talked about group trade, game theory. This Sunday, and then idea of the week, trade idea of the week. There's a lot of concepts on trading psychology, right? Trading psychology is important, how well you deal with your emotions, and how do you build trading plan, how do you build it, keep a trading journal. I do encourage you, I'm going to put this link to schedule consultation, right? You can schedule a consultation with Keith to talk about your trading plan or help with the trading plan or how to build trading journal or any other questions about subscriptions. So I'll drop that link here. And then, so I'll put that link in the chat inside of the questions. You guys can type that in. And we also, markets are moving fast, right? Every 15 minutes, market can go up 3%, can go down 3%. So we do have again, a marketing relationship with AGT, where you can auto-execute some of our services, right? So I'm going to drop this. So if you want to pick up a phone and talk to a broker or auto-execute some of our signals, then you can go to this link, open up account at Avantgarde, tell them which service you want to auto-execute, and then, this would be, we're actually giving you 3 months, we'll refund 3 months of your subscription if you decide to do that. So I'm also going to drop that link, and I will also put it in the chat and put it inside of the questions. How much is it with Avantgarde? So it's a 65, if you do it yourself, it's 65 cents a contract. And so 65 cents a contract if you place the trades on your own. If you want to auto execute, it's I think it's $15 per trade, minimum trade. And you can go to Avantgarde Trading. Let's go. It's actually should be there. Avantgarde Trading pricing. So $15 for equity and $15 minimum for option. So if you want to auto execute our dynamic power trader, then you can use Avantgarde. I'll put the link to Avantgarde site as well. Thank you, Martin. Thank you, Chuck. Any questions? All right, let's take a look at the other sector and see if anything else stands out. again, today's risk on, right, with the possibility of, market reaching the turning points, right, finding the bottom. Retail sector, it's still a weak rebound, but not making new lows. So retail sector, the good news is not making new lows for the past 3 weeks. I would say that's positive. Energy is down today 3% on the news. Metals and miners are up 3%. Silver, copper, aluminum are up. Consumer discretionary, Teslas of the world are up, but still, kind of not making new lows and retracing some of the losses from last week. Healthcare, not making new lows. Utilities rebounded this week, but now trading lower. Consumer staples flat. XLK technology, the most oversold sector, right, up 3.5%. Industrials were extremely oversold, up 2.5%. Banks were oversold, up 2%. But again, for now, no new signal, right? In XLF, we're still not trading above last week high. Industrials were not trading above last week high. Energy pull back. Materials are doing better. We're above last week high, so that's positive. Home builders not making new lows, so that's positive. Biotech, strong rebound in biotech, up 7%. Biotech stocks are still trading higher in confirmed uptrend. So strong performance in biotech. REITs are trading the same level. VIX is much lower, right? We were at 32 this week and last, now we're at 26. QQQ is up 574, approaching very important level 580. That's the breakdown below the November low and the September lows. Spiders is at 647. Junk bonds not making new lows, and strong performance in airlines. They were oversold, not making new lows for 4 weeks. That's positive. Semiconductors flat, and transportation not making new lows in the past 4 weeks. That's positive. Small caps are not making new lows in the past 4 weeks. That's positive. Germany is up 2.5%, and silver is up 6%, bouncing back. All right, any questions? Let's look at SPX. Important level, right? That's 65.50. The bulls probably at this point want to close this gap, right? We broke down below this level. We're staying at 6,500 for the uptrend, for this to call the bottom, for the next 2 days, ideally after today's Tuesday, after the unemployment data, if we're at the 6,600 level or above, then I think the bottom is in place. Until then, 1 day usually doesn't set the bottom, right? You want at least 2 to 3 days to confirm the bottom in place. Any questions? Martin, the QQQ put spread, right now it's open, right? The order is open, right? I'm buying it at $4.50, and I'm buying 565 put, and I'm selling 545. So it's a debit put spread. It's a debit put spread that I'm trying to put in. If you remember yesterday, I closed QQQ put spread. So yesterday I closed the QQQ put spread at $7.80, right? That's the April one. So I closed my debit put spread, and now I'm opening, right? I'm opening a new spread, and I'm going into May, right? Because April, after this week, there's only 2 weeks left. So at this point, you want to start thinking about closing your April positions and potentially rolling them into May, if you're still, bullish or bearish on these positions. Any other questions? Alex, Anoop, Chuck, Gordon, Harry, Larry, Martin, Tim, any questions? All right, then that's all I have for today. Keep an eye on SPX, right? Very important level session, high 65.20. Next level is the gap, right? Ideally, bulls want to close the gap and trade above 6,600 or at this level for the next couple of days. And the bears, as long as it's below 6,500, then the door is still open for more pressure to the downside. I would keep an eye on the 10-year yield. Ideally, you want it to drop below 420. 10-year yield to drop below 420, right, for the rally to continue. Right, this was a downtrend, and for the dollar to be, below 99, below 98, and just as important, crude oil. Right, crude oil is still at 100. Ideally, you want it to drop, below, 85. That's where the conflict started, right? And somewhere in here, that's where energy crisis, kind of this energy shock started. So you want crude oil to drop below 85, but first things first, because we do have this high. Right, you want it to be dropped at least below the 90, which would be September of 23, right? September of 23 high. All right, that's all I have for today. Thank you very much. I appreciate your attendance. Am I bearish? I am market neutral at this point because I closed the hedge yesterday, right? I have for each of the long positions, I have a short position, right? Because we're still 1 hour or 1 day doesn't set the trend. But it seems like, as you saw, we're not making new lows on retail stocks, on home builders. So we're not making new lows for a few weeks. So I think, the bottom is probably close. We're close to the bottom than to all-time high. But again, a lot of it will be contingent upon oil prices. If crude oil stays above 100 by next Friday, then I would say you still don't know where the bottom is. So I'm market neutral because why do gaps fill? No, gaps fill because something happens, right? Something happens, and the equilibrium is broken between bulls and bears, right? So here you had a gap up, right? 1 hour. Oh, it's the 1 day. We did 1 day. Right. So the markets are so this is a big gap, right? The same thing, potential, de-escalation, right? You had a gap in the market open, right? Because there was some news. Same thing here, gaps open because market was oversold and potentially, interest rate drop after Powell's comments, and now we have oil prices. So these gaps, usually you want it to be filled because it basically undoes what the previous news created in equilibrium between bulls and bears, right? And these support and resistance levels, this is where equilibrium between bulls and bears and where they meet, right? And then everybody's trying to decide who's going to win next, right? So right now everybody decided, well, are we going to close the gap? Then the bulls are in control, at least short term. Or if we fail to close the gap, then means more likely than not we will roll over, right? But the gaps are important equilibrium. You can see these support lines, right? This bars are where there's a high, billions of dollars of open interest are sitting at the 6,500 level, at 6,600 level, right? We're talking about $2 billion worth. So a lot of people are building this position. And same thing, you can see 6,000, right? 6,000 is the highest level of concentration of open interest, right? In the April and June contracts. One is 6,000 and just as much is on 7,000, right? There's, going back to the game theory, there are some people think that this is a temporary shock and we're going to all-time highs, right? And there are some people think that, between the exposure to private credit and, cooling of employment and oil prices that, we're going much lower, right? So, and right now it's 50-50, right? We're right at the middle between 7,000 all-time high and between 6,000, right? So it's yeah. Next move would be very important, right? To stay either above 6,500 or fall back to the recent lows. Any other questions? All right. Again, consider opening up account in Vanguard and see if you want to auto-execute any of these services. And also talk to Keith, schedule on a one-on-one consultation. Trading plan is important. I encourage you to do everything in writing, right? Write down every single trade. Ask yourself why multiple times, why you get into the trade. And always keep in mind how much cash you have in the account. You don't want to be on a margin call. You know, look at the portfolio exposure. And again, as a homework, some of the books that if you've been on my webinars, you already know. But if you're not, thinking in bets, right? This is a great way to think about risk control, right? And Duke, she's a PhD in psychology. She's a world champion in poker, but same, the risk management, whether you play in poker or you're trading, are very similar. How you're approaching the risk and how you're trading, right? The systematic approach, and then thinking fast and thinking slow. But Daniel Kahneman, right? Prospect theory, right? Behavioral finance is extremely important, and recognizing that we make decisions in two different systems, right? Kind of a fast mode where this is reactive, right? You're trading a lot on intuition or on emotions, right? And more methodical, right? More cognitive thinking where you keep in a trading plan, you keep in a journal. So it's important to realize when you trade in which mode you are, and do you want to be in that mode when you place in a trade, right? All right, that's all I have for today. Thank you very much. We have a lot of people today. We're not going to have a webinar next Tuesday. I'm traveling, but we will be same time on Tuesday, 2 weeks from now. So I hope everybody can make it there. I appreciate your time. Very important for me. Alex, we have two Alexes. Anup, Gordon, Harry, Martin, Tim. Thank you very much and have a great day.